Thank you for tuning in and welcome back, team. Whether you just closed on your new home or if you're actually just planning on how to buy your new home and you want to know more about what it costs to maintain the average home, you are in the right place. In today's episode, we're going to take a look at 7 costs besides the mortgage. I mean, that's the one that we all know about anyways, right? So we're taking a look at the 7 costs that you can expect over the course of your home ownership, and so you can better prepare for them, okay? My name is Andrew Finney, your real estate geek. If you need help finding a top agent where you live, or if you simply want to drop me a line to say hello, my contact info is below. If you haven't done so already, please go ahead and subscribe this channel now and like this video. For reference, I upload 6 days a week, so be sure to tap the bell icon and get notified of the very next video. Okay, team, so let's talk about this. Now, in this video, I want you to understand this up front, right? We're taking a national average for the next 7 costs. Now, plug and play them as you see fit based upon what's the reality for your utilities and the different topics that we'll be covering in this video, and to what's realistic and how it works in your area. And then factor a game plan off of these 7 costs so you know what your operating budget is for your home every single month, okay? So the 7 costs to maintain the average home is going to really begin with one of the most important ones, and that's your homeowner's insurance. Your homeowner's insurance on average across the United States, Value Penguin is a source of this information, by the way. Value Penguin says that it's about $952 per year, and that puts you somewhere in the neighborhood of about $79 a month. Now, if you're wondering, are you underpaying or overpaying for your homeowner's insurance, there's a very quick down and dirty thing that you can do with the following the equation, okay? So we want to take your property's value, not the value of your home and the land, just your home itself. Now, the first time you got an insurance quote, they should have given you a number, and then what you want to do is you want to take that number and you want to divide it out by 1,000. After you divide the value by 1,000, you take the resulting product and you multiply it by $3.50. Now that will give you an estimated amount of what your homeowner insurance should be. And if your homeowner's insurance is somewhere around that, then you're probably pretty good. Now, obviously it's going to depend on whether you're carrying like riders on your policy, if you're carrying umbrella policies, or the specific coverages that you have. But it is a really down and dirty, quick way to know really quick, is your homeowner's insurance at the right level? So in other words, are you underinsured, overinsured, right? Use that tip and let us know how it's working for you in the comment section below. Now, the second cost is private mortgage insurance. Of course, if you are buying your home or you bought your home with less than 20% down, then you're going to be having what's called private mortgage insurance or mortgage insurance premium if it was like an FHA loan. Now, that can cost you a lot of money over the lifetime of your loan. Now, the good news with private mortgage insurance is if you have like a conventional loan, once you get the 20% loan to value, you can call up your lender and ask them to drop it off, and they normally will take care of that pretty quick for you, right? Mortgage insurance premium, if it's tied on to an FHA loan, normally goes the life of the loan. For more information about how that stuff works, you should contact your loan officer that you're working with, that you did work with, and your mortgage servicing company to figure out some more information about that and when you can drop those costs, right? But let's say that, going back to average costs, right? So let's say that the typical price for private mortgage insurance is like 0.5% to 1.2% of your loan amount. So let's use it for easy math purposes. Let's say that you have a 1% private mortgage insurance on a $190,000 home. That would add about $158 to your monthly home cost in just private mortgage insurance. So you can see and realize an immediate savings as soon as you can get rid of the private mortgage insurance, okay? The third cost is actually services. You know, services like yard care, pest services, snow removal, whatever kind of services that you need on your home. Lawn care itself can cost you as much as $158 a month, according to HomeAdvisor. And HomeAdvisor would likely know this because they're a really great website for home improvement as a marketplace and sharing different average costs around the board across the nation for us. Now, if you're in a snow-prone area, sometimes it can be about $115 a month. So those are additional costs that if you're going to hire services, then you expect to pay about an average of $130 to $158 a month for those services. It's, of course, those services are entirely up to you. You can either pocket the money by doing it yourself, or you can go ahead and pay it out. Either way, just know what that average cost is so that you can plan and budget accordingly. Now, the fourth one, and this is a big one, the fourth one is property taxes. Your property taxes are pretty interesting because a property tax after you've owned your home for 1 to 2 years may change depending on your county or city. They might increase it if the market's going up. They might decrease it if the market's going down. Now, here in Las Vegas, Nevada recently, my home value was reassessed by the county and my property taxes went up a little bit, but it's not anything that's going to really kill you. I mean, mine came up to about an additional $10 a month, so $120 more a year because my home value actually increased. So I was like, oh, home value increased. Got this little bitty $120 extra that has to go out to the county in the form of property taxes, that's okay. My home value went up. I'm okay with that. But it's something for you to know about, because if home values shift downwards, the county also needs to reassess and then reduce your property tax at that point too. So those are kind of fluctuating with markets, whether they're strong markets or whether they're weaker markets, or if they're just like middle ground markets. On average, you could expect to pay around the country about $218 a month on property taxes. And the way that this works is that it's a percentage of your home's value. Across the United States, that if you averaged out all property taxes across the board, it's about 1.31% of your property's value, according to CoreLogic, who actually provides consumer financial and property information. So let's break it down on a simple example here. So if your home is worth $200,000, that means you'll pay roughly $2,620 per year in property taxes. So 200,000 times 1.31%, $2,620 a year, $2,620 in property taxes. Again, subject to reassessment. It's just something I want you to keep in the back of your mind as you own your home, okay? The fifth cost is your utility bills. Now, water, trash, electricity, gas, sewer, what have you, right? Those things can add up. And every single year, in fact, they average about $201 a month. It just depends on your consumption, but Home Advisor is tracking this information, and Home Advisor is estimating that, along with the U.S. Energy Information Administration, they're averaging for the average U.S. household that you're going to spend about $201 between your utilities every single month. So again, that can change, and you can impact that directly by just replacing any of your lights to like CFL bulbs, compact fluorescent lights, and ensuring that you have Energy Star rated appliances and any kind of other energy efficiency tips that you could use. Maybe sealing up around windows, sealing up around doors, stuff like that, to make sure that you have weatherproofing, weather stripping going on. That can actually help you save a lot of money with your utilities as well. So then the sixth cost is your HOA. Now, you might have one, you might not have one. Of course, an HOA is an acronym for Homeowners Association. Now, what's interesting about this is that if you average out a lot of the HOAs across the country, they say that it's going to be somewhere between $200 and $300 a month on average for an HOA payment. So if we take that average and we cut it right down and average it one more time out, that'll put you at $250 a month. And of course, that's going to depend on your community, your property style, your property size. Are you in a condo, a townhome, single family home? I live in a single family home here in Las Vegas, Nevada. I live in a guard-gated golf course community. My HOAs are $178 a month. So obviously estimating $250 would be a little too much. At the same time, these are things that you'll know when you get ready to go into home shopping mode, and you likely knew what you were getting yourself into with the HOA cost. But this is one of those things that either you're going to have it if you live in an HOA, or you're not if you don't live in an HOA. Either way, it's something smart to plan for. The seventh cost that we're going to talk about today are your repairs and general maintenance. Now, it's important to really take a closer look at this. It's always very, very prudent so that take 1% to 2% of your home's value every single year and put it into its separate savings account for your home maintenance. That doesn't mean that you're going to have to spend it every single year maintaining your home, but it means that you start providing yourself a home repair / maintenance fund, so that if you need to replace the roof, you need to replace AC, you need to replace the furnace, you need to replace the water heater, whatever, right? You have the money on hand to do it and go ahead and maintain your home accordingly. So on average, let's use it again, easy math purpose, pay $200,000 for your house and you want to save about $168 per month. And that would give you a little bit of money at the end of the year to go ahead and have about $2,000, matter of fact, 1%, it'd be exactly $2,000, matter of fact. So if you had a $200,000 home, you put $2,000 aside per year for your home maintenance and repair costs, then you're looking at $168 additional a month. Now, these are all costs that you should be planning for, whether you, again, if you're out there searching for a home right now, factor on having these costs and go ahead and build out your budget accordingly. If you just closed on your home, or if you've actually owned your home for a long time and just always wondered about this kind of information, go ahead and devise your budget and adjust accordingly based off of these 7 costs. Now, here's what I'd like you to do. Tell us what you're thinking about this video in the comment section below, along with any of your other tips you would like to share with us about the cost to maintain a home. Share your experiences with us on how to cut costs to maintain a home as well, so that we can continue to learn and grow as a community together. Now, I'm going to go ahead and pop up my contact information. If you need help finding a top agent where you live, or if you simply want to drop me a line to say hello, please let me know. Always love to hear from you. Now, if you haven't done so, I'm going to ask you to do 3 things. Number 1, please go ahead and subscribe to this channel now. Please like this video. And the third thing, please share this video around with someone you know is going to be able to help. Just like you, I'm sure you can think of just one other person right now that could really benefit from this video today. Please share it with them. Thank you. And between now and next time, I'm wishing you and yours a lifetime full of love, wealth, abundance, and happiness. Thank you for watching today, team. See you again soon.